I'm Myles, CEO and co-founder of Globacap. Nice to meet you. Hope you're all still energized and awake. We are all about infrastructure in private markets. We were founded with the purpose of digitizing and automating private markets workflow. And that's end-to-end. And that really means compression of operating costs, streamlining of workflow, enhancing margins, and driving profitability for all institutions and funds in the private markets space. And what that really means is we essentially deliver private markets as a service, from workflow automation to regulatory infrastructure and connectivity between our clients. And that's end-to-end private markets, from primary, private placement, all of the workflow associated, through ongoing vehicle register management and secondary liquidity. To date, we've hosted just over 150 primary placements in our software, and our software has matched, settled, executed with automated settlement finality, just over $600 million of secondary liquidity in private vehicles. So if we just zoom out for a second, there are a couple of big problems facing private markets right now. The proportion of investment allocation in large asset allocators between public and private markets assets is completely disproportional. So on average, large asset allocators like pension funds hold 92% of their portfolio in public markets assets, which comprise just 0.1% of available assets out there. That's a huge concentration risk. That's because of liquidity risk, right? It's hard to get liquidity in private markets assets. That's changing very significantly. Over the last decade, we've seen NASDAQ private market emerge. We've seen in the last 2 decades, the number of public companies in the US has fallen by half. And in the last 10 years, the acceleration of the growth rate of private markets has actually outpaced public markets by 1.7 to 1. 2 weeks ago, CalPERS, one of the largest pension funds in the world, has said they're increasing their private markets allocation to 40%, 40%. That's a huge difference. Now, if we just see an average change from 92% public markets assets to 88% to 75-25, right? And CalPERS is already more than that, so this is very realistic in the next decade. That means $25 trillion of assets flowing from public markets holdings to private markets holdings. Is private markets world actually equipped to handle that kind of inflow, considering private markets is only $13 trillion now, so that's double. Number 2, asset managers, specifically private equity funds, VC funds. There is a growing pressure on fees and access to capital. There's an increased demand from liquidity from LPs. And there is increased problems with finding exit opportunities. Public markets isn't all that it used to be. So we are there with the software solution that solves that. And ultimately, our software lowers execution risk, reduces operating cost for participants, and increases liquidity depth as we are connecting our white label clients together. So to date, we have 14 white labels for global institutions. We have, as I mentioned, our software has hosted just over 150 primary placements. And $25 billion of assets are administered in our ecosystem. And our software has settled just over $600 million of secondary liquidity events in private vehicles. Those have all been very private transactions where the buyers and sellers have been existing holders in those vehicles. Just to unpack that a little bit further, so private placement, that is a typical private placement workflow. Varies, obviously there are nuances in different situations, but typically that's what a typical private placement looks like. Step number 7, executing agreements. If you have, let's say, a feeder vehicle into a private equity fund, and you've got 50 high net worths that are investing, that's 50 individual subscription agreements that need to be created and sent out, right? It seems like a small step, but you're paying a lawyer a lot of money to do that step. It's kind of crazy. If you have co-investment opportunity into a VC deal, or if you have an advisory firm that is distributing to a combination of institutional and high net worth clients, right? That's a lot of subscription agreements that just need to be crafted. Tiny little step, our platform automates that completely. So that overpaid lawyer just loads one subscription document into our platform, inserts where the dynamic fields are. The platform has all the order information, all the detailed information about the investors, automatically creates all of them. We plug into DocuSign, sends them out for execution. Platform does everything. Full workflow automation. We've done that from investor onboarding to NDA execution to all the data room to indications of interest, book building, syndication, subscription document execution, and settlement finality. We also do that for ongoing asset, securities register management, multi-asset, debt, equity, and fund vehicles, including all of the subscription flow, the capital calls, the distributions back the other way, the investor communications, and we have done that for secondary liquidity as well. Quick few examples of some of our client base. DXA Invest, for example, is a private equity vehicle. They spin up Cayman funds. We do all of the order subscription document execution into those vehicles. They administer that on their platform, and we connect directly with their fund administrator, who essentially rubber stamps all of those processes. So we've reduced their operational costs. We've reduced their headcount. We've reduced their reliance on their fund administrator at the same time. Kimura, Cambridge Future Tech, similar. XTX Markets is one of the largest privately held capital markets institutions in the world. They host their share register on our platform, and we host also an annual liquidity event, or they do, using our software. Pigeon Investment Management is a real estate private equity firm in the UK. They host 48 vehicles on our platform. Instinet is the institutional securities division of Nomura. They have a purely institutional asset manager audience, and they use the advisory team at Nomura uses a white label version of our platform to distribute their deal flow to Instinet's asset manager audience, and it's workflow compression. So the small advisory team can distribute to a much larger pool of institutional asset managers at once with all the NDA execution, the book building, the order information, subscription documents, the whole lot, taken care of by the platform. 18 months ago, we launched a platform for the Johannesburg Stock Exchange with their entrance into private markets. So that is a private placement platform in South Africa. That's been a very successful endeavor for them because they have more open interest, more projects seeking capital and more investor interest than their public markets over the same time period in primary raising. And just over about a year and a quarter ago, we received investment from CBOE Global Markets, one of the largest exchange groups in the world based in the US. And we're launching a venture with them in the second half of this year. We're a few weeks away from reg authorization in the US. So in addition to what I've just described, we are now just piloting transactions of connectivity between our white label clients. And to grow a global private markets connected network is something that is not easy, and many sell-side firms have tried it, but they come with a very biased perspective. We're fairly uniquely positioned from that regard because we're a technology firm, first and foremost. Number two, we have 2 of the top 20 exchanges around the world plugged in, and we are in commercial discussion with other exchange groups. That's, in my opinion, in order to grow a global network for private markets, you actually need public markets exchange groups to act on that network as hubs, and we have that. 2, we have highly functional technology. If you look at what's available in NASDAQ Private Market, Forge, other similar types of marketplaces, actually they don't have that much technology. They have technology for buyers and sellers coming together, but in terms of the actual execution, it's a lot of manual work behind the scenes. We have everything automated. We've replaced those humans with automation. And 3, we are regulated. So we're regulated in the UK by the FCA as a securities arranger and as a custodian. We act in that capacity in some instances. And we are a few weeks away from being regulated as a broker-dealer and an ATS in the United States as well. We're also not a technology company created by technologists, but we are a technology company created by capital markets people who have been working frontline in capital markets and solving capital markets problems. And our wider team comes from the same space. Investors include CBOE Global Markets, the JSE, More Capital Management, and so on. Very quickly on our, we've got really strong commercial positioning. We're relatively early on revenue acceleration, and that's happening right now. So we're on track to close about £3 million this year, which would be about 150% growth rate. We're launching second half of the year with CBOE Global Markets in the US, and we expect to close next year on £5 to £7 million. That's it. Thank you very much.